Eric, it's so nice to speak with you at the trade show. Thank you for coming out here, and we're happy to be tabling next to you. Just a little bit to pick your brain is, what are you seeing in the industry sort of as a fallout of the extra space, life storage, acquisition, and with rates being so high? Are you seeing people trying to get back in the industry and get back into development? What are you seeing?
Thanks, James. So basically what I've been seeing on the ground going from market to market is people still want to be in the industry. Rates have kind of taken a hit in certain markets where we've seen a lot of new sites come online. We're seeing rates drop, but then to fill up locations to gain that occupancy, and then they're going to raise rates down the line, whatever that might look like, 6 months, 9 months, to get back to that higher rate. Asking rates in where sites are full, markets are strong. You're still seeing strong high rates. People coming into the industry, there's still room for growth in it. Okay, the people, it's all about timing. So right now it may not look wonderful with high interest rates and lower rates in certain areas, but I've been out and I've seen areas that are still strong rates, strong growth. And people want to be there. They understand that it's going to take them about 2 years to open their doors. You're going to see that, and in that 2 years, you're going to see rates from the other REITs come back up as they take over, implement their institutions, their policies, and more than likely, you're going to see them. They have to perform to Wall Street, so that Wall Street wants to see them doing well. So they'll bring those rates back up. It's just right now it's an interesting time, and going into when someone coming into the industry, going back to that, again, 2-3 years from opening your doors, hopefully they'll be on the back end of that cycle, and we can continue the growth in the industry.
No, that makes a lot of sense to me. Thank you for those insights. And we definitely have seen demand for self-storage sort of even out from the COVID highs, like that huge outlier in those 2 years. But do you think demand for self-storage is staying strong? People are speculating that because rates are so high, there's less people moving. Why would they give up on a mortgage of a low rate, if rates are so high? What are your thoughts on demand for self-storage right now?
Again, market specific. People still need storage. You still have college kids, you still have mothers, elderly people moving in with their family. You are seeing a change from when people were using their other bedrooms for classrooms, offices, people are going back to work. People that didn't move at those times, people that didn't come from the south, move from the north to the south, that stayed, they're going back to work, reusing those rooms, getting their stuff as storage. But again, everything's cyclical. Election year next year, I'm sure we'll see rates start to drop. People start moving again. 20 years storage, as I've been in the industry, I've seen all the lows, all the highs. Nothing like I saw during COVID, but it's a cycle. So people will eventually start moving again. Rates will drop in terms of interest rates. Construction costs are probably here to stay, but you'll start seeing those changes probably, I would hope, in the next year or two. Demand stays high. People need storage.
That's true. No, absolutely. Americans do love their things. Thank you, Eric. Thank you for giving some altitude to the situation and hearing your insights. Thank you so much.
Thanks, James.